Hello, Smart Money Tree podcast listeners. Welcome to this week's show. My name is Kurt Chisholm, and I will be your host. So today I've got Joe Kelly joining us. How you doing today, Joe?
Great.
Great. Well, glad to have you here. For those of you who don't know Joe, tell us a little bit about your background before we begin.
I've been an entrepreneur most of my career, based in Austin, Texas. Actually grew up in Anchorage, Alaska. As a teenager, lived on a sailboat for a couple of years with my family. It really set me on the path of wanting to become an entrepreneur, and kind of early, probably inspired me to look at Bitcoin too when it came around. Started Unchained. I'm the co-founder and CEO here. We started in 2016, and we focus on providing financial services for long-term Bitcoin holders.
Nice, nice. So what kind of services? Isn't everybody kind of a hodler? They just hold on for dear life and that's it? Like what do you guys do?
Yeah, but there's interesting ramifications there, and indeed, I modify it by saying, including it's long-term holders, so tend to be people we work with, and they do have hold Bitcoin. But when you hold Bitcoin for the long term, you do have issues around, the security of it, the safekeeping. There's a lot of exchange out there. There's been a lot of exchange hacks and ways to lose your Bitcoin. So that's always top of mind for people, but also matters of inheritance and dealing with issues if you die or incapacitated. How can your spouse or your family or some next of kin recover your Bitcoin securely as well? So things just on that simple holding use case, there's a lot to do. We also have IRA accounts. That's another method of holding Bitcoin for the long term. And we have other financial services like trading and lending.
Nice. Cool. So so tell us, I mean, this year's been an interesting year for Bitcoin, for Ethereum, for just, I mean, crypto in general. Uh, what are some of I guess, the most impactful things that have happened this year in your mind in the crypto space?
Certainly the start of the year with the ETF getting approved, or the odds going up, and then it was clear it was approved. It's kind of a classic sell the news day, at least when it initially launched. And there's some dynamics of the conversion of GBTC into an ETF that kind of led to a lot of the additional sell pressure there. But that was at least one big mainstreaming moment for Bitcoin, becoming able to be wrapped in these exchange traded products. And then it kind of felt like maybe the summer was more dormant, or just more kind of boring price wise. And even though there's a lot of companies like us who continue to build and onboard new clients, and then really most recently with the incoming administration having made promises, seemingly taking steps that may align with those promises including the idea of the U.S. having its own strategic reserve of Bitcoin. So the prospect of those coming around, being around the corner now, once this new administration takes official effect, that's also been a big part of the narrative, and like a big part of excitement for us, our clients, broader industry for sure.
So what is that going to do? I mean, the ETF certainly it makes it. I always found this to be odd. I mean, there were closed-end funds. The GBTC was a closed-end fund, and people just said, "Wow, now we can buy them in the ETFs." Well, it's the same darn thing. I mean, it just changes the structure a little bit. But what's the big deal about that changeover? Like, why did people get so excited about ETFs compared to a closed-end fund that was available before? And frankly, it was at a discount at one point.
Yeah. Yeah. Well, it was also at a premium for a very long time, and there was an arbitrage there between, because there's certain ways, I think if you, I can't remember which side of it, but if you're like contributing Bitcoin in kind to the trust, there's a lockup period. So there were ways that working with that's just that trust product was a little more restrictive than the ETF, and perhaps less commonly available in different brokerage accounts and on different brokerage platforms. So that was a big, and other than that, I think just also the who was behind it. It was Fidelity, it was BlackRock. It wasn't this grayscale thing not a lot of people had heard of, that was kind of behind the product. So it was also that the institutional classic Wall Street imprimatur that gave Bitcoin with the transition to the ETFs.
Yeah, so where do you think that goes? I mean, the SEC was pretty much hammering Bitcoin for years, and then they allowed it, partially because they probably had to. But they allowed it, and now it's kind of opened up the floodgates, and now the new administration's talking about, as you said, the reserve, strategic reserve. But what's the strategic reserve going to do? Like, why would that be important for us to have that? I mean, we have gold, which they don't even talk about, and they poo-poo the fact that we even have gold on the strategic reserves in the Federal Reserve. But what, how does that kind of play in? Why does that matter?
I'd say really the kind of I think I mean the Bitcoin insider views it as, we're in Bitcoin. There's a belief here that Bitcoin is a multi-hundred year long asset. It's a new form of digital gold if you want to analogize it in that way. That's going to be around for a long time as this basic digital commodity that's limited and scarce, and is just going to increase in value because you can't necessarily make more of it. It is limited in a digitally mediated world where we're all transacting in. There's going to be more and more use cases, more and more reasons to have Bitcoin, whether that's because like AI bots transact with it, or other means and use cases where Bitcoin's important. So, I mean, just that overall, it's a strategically important commodity because it is limited and of scarce supply, and it's shown in its 15-year history that uh, it it's gone up a lot in price, or it's gotten a lot more valuable, and there's maybe more yet 10x, possibly 100x, yet further legs it can go. But that for the US to kind of miss out on that or not be early in at least something of the early innings for some of that broader adoption and appreciation, could be a bad move, could be a mistake. There's certainly other states, other sovereigns that are making plays or making choices to invest and hold Bitcoin as a sovereign. And so I mean, I think I've forgotten this anecdote, but I know even like we have a cheese reserve or something like I wanted to refresh um my literature on that because I'm pretty dang sure it's either some states do, or at least actually in fact the United States of America has a cheese reserve. So if we have a cheese reserve, if we have oil reserves, and if we have gold reserves, what's um Bitcoin again, and just from this like this digital frontier that we are at, and that US has maintained its leadership in, that this is kind of one way to further cement that leadership.
Yeah, I guess that makes sense. The one question that always kind of comes to mind is this. I mean, Bitcoin um, is primarily a speculative asset at this point, and it has been. And everyone talks about the potential awesomeness of Bitcoin and the future and all this, but I don't see a lot of stuff being built around Bitcoin other than it being a store of value. And like I'll give you for an example. Like you might not agree Ethereum is a great technology. Some do, some don't, and we don't get down that road. But it exists and it does have a function, right? It's primarily there's a function to do smart contracts. Bitcoin is a store of wealth, but isn't really used for much else. So what is the value of holding something that basically everybody's just holding? Does it become the beanie baby, or like why should it continue to be valuable just because people are currently valuing it?
Think there's kind of multiple things unpacked there, and I agree. I try to be careful of not both being like overly hyperbolic, and just being kind of precise about where that value is to your question. Because I mean, there's as a store of wealth that has gone up a lot, that like just has some utility. Of course, a store of wealth that doesn't go up or just kind of maintains is kind of just more humdrum. But it has at least empirically and demonstrably gone up in price and value. So that's been high utility, people holding it and saving in it. And the other main utility factor, the next big one I would say, comes from what that experience is like when you get to use Bitcoin, you'd say natively, when you get to transact with Bitcoin in a way where I send, a Bitcoin to you, Kirk, but I do it in a way where I control the wallet, I control the keys at the time of sending it, and whether or not you control your wallet is up to you, but at least that experience of a non-intermediated transaction or transfer of value from one to another. I mean, that is something. And you see those in periods of bank failures or financial censorship. Depending on the person, they may have experience with those things. And I mean, it's fun. I mean, at least the kind of service Unchained provides is such that, you can't right now go to your bank account at Chase and move your funds out from there into a bank account at Wells Fargo with like with a backdoor by going to the Federal Reserve. Hey, please, change the balances you have for those respective banks to modify my account, and that you have to go through those banks. They intermediate that the whole way. Bitcoin is different. Our clients, like we could disappear tomorrow, our website could go down. All our clients are equipped with the means by through possession of their own keys. They could use a lot of other third-party tools, and it's like a backdoor. It's a backdoor way they can just communicate directly with the network. And so deposit run type mechanics or that kind of counterparty risk doesn't live with a service like Unchained. And so that's it. Yet an even way we kind of build at least our services on that value proposition of Bitcoin as it's still a censorship resistance or non-censorable transaction currency as long as you are using your own keys. And then once it's at Coinbase or in those those kinds of environments, it is now re-intermediated, but there's still utility to them. And then I guess just on the third leg, I mean, there's a big industry by now sprung up around Bitcoin. Mining is one, and that amplifies or works with those other use cases to help provide what is that uncensorable backbone to it, and that the mining, like the game theory around it, the mechanics of it, all kind of conspire to make it so that like it lives on a world stage of as an asset that like you can't be a government, you can't be a Google or a Microsoft or an NVIDIA, you can't build enough data centers fast enough to like take over the Bitcoin network. It really lives outside of those kinds of individual companies or sovereign capacities now. And that's employs a lot of people. We employ people at Unchained. So now this like other there's a lot that's kind of come out of it that as like an industry is like a net positive, I would say.
Nice. So it kind of brings up a few questions here, because one of the questions is always, can it be hacked? And yeah, I want you to, I guess, respond to that first, and I got a follow up. So what's when somebody says that, how do you respond to that?
It depends on like more the precise way they mean it. I don't think you can't really hack the Bitcoin sort of network. It's not possible to reach in and say, well, so that person owning $10 million of Bitcoin, I would like to own it instead. That's not a way you can really insert yourself at the Bitcoin network or protocol level. Because if you could, a lot of people try. It's a big $2 trillion bug bounty out there to go if you can, reap and harvest Bitcoin out of just hacking the network directly. People should go at it. It's where people get hacked are in the management of their keys or in the storage of the Bitcoin, or often like when it's sitting in your Coinbase account, if you're reusing a password, or there's some means by which someone gets access to your Coinbase account and then transfers out the Bitcoin, it's really kind of gone at that point. So that's where the hacks that you hear about tend to occur. They're at the exchange level or something around the person's keys and how they're transacting with the Bitcoin at that time. There was an announcement of like a new quantum computing result from Google, I believe their Willow project. I'm going to be less, I'm more to my depth commenting on like the quantum resistance properties of encryption in Bitcoin, but I can at least say confidently, I mean, encryption in Bitcoin is as good, if not like in the top kind of quartile or percentiles of cryptography used across the internet. So there's a lot, like a lot of other websites are going to have a problem. If there was a breakthrough in quantum computing tomorrow that could allow those keys to be like guessed and found by those quantum computers. But there's still a lot of zeros to go. Like whatever result Willow and through Google announced last week, there's still a lot of orders of magnitude of efficiency, effectiveness, and computing power to come out of that a lot of us just kind of, at least from my stance, I trust or I look at the people that are knowledgeable and work on cryptography. They're very aware of this, and there's constantly this push and this arms race to find and implement more quantum resistant cryptographic solutions, and that Bitcoin will get to have those over time.
Well, I would imagine if quantum, I mean, I saw that news yesterday too, and it was fascinating to read about it.
Yeah.
And it kind of makes me wonder, like, how long have they had that? And I feel like they said that like 6 or 9 months ago too, and now they came out with more on this. But wait, I guess it kind of raises the point. Well, if they come out with a quantum computer that can crack all these websites, obviously everyone else, as you said, the arms race, well, they're going to increase their encryption. So doesn't that happen with Bitcoin too? So it just balances itself out?
That's really my point. That I think
Yeah.
the people as good or the best cryptographers in the world that would work on SSL certificate encryption for websites are on par on the level of people that would be concerned with that for Bitcoin and how to implement things like that there.
Okay. I remember having a conversation with a pretty smart individual a few years ago, and he was talking about how he was going to start up a mining company. He was going to get a bunch of rigs and start mining. He's like, I expect we'll get about 20% returns a year. I was like, that's great. And I started thinking about it. I'm like, all right, so you're going to get 20% returns a year, or I could just go take that money and go buy Bitcoin, and I'm making 60% returns a year. Why would I ever go mine? It doesn't make any sense. So I don't know if you've had that conversation with anybody, but to me, it's like, why would anybody ever mind? Just go buy it and just wait.
Yeah, it's totally attention there. It's attention there for our business, even when I'm raising money from equity holders, things like that. Like, and there's a trade-off there, and I view our business as pretty hard, and I think mining is harder. It's a harder business, just in terms of it's very brutal, in terms of the kind of commodity, like provision that it is, and so much it comes up, so much of your advantage that comes out of your arbitrage and energy prices, or how cheap your marginal costs are for energy. And so unless you really got the right thing cornered there, then your investment case is hard. But I mean, at least for entrepreneurs in mining, there's over years it ebbs and flows, but there's been good capital raising methods for that. If you can get loans, if you can get 0 to 75 bips, price convertible notes to go raise $500 million to expand. There's a cost of capital function at which that makes sense, and so that's part of why I think people venture into that business. And for some, it can look really positive. And I was struck also by your example of like if you were at the fork in that decision, like invest in mining or invest in Bitcoin, there's like the marginal decision by you there to buy some more Bitcoin, might influence the price up more, and then therefore also make his mining more profitable. So it kind of there's this kind of way that there's on like a market setting, and there's like a real market dynamic perspective that gosh, if we all just chose to buy Bitcoin, mining would look really good. So that's why there's a beautiful kind of market function happening at a lot of layers in Bitcoin that make it work.
Interesting. So I also wanted to ask you about, I know Michael Saylor's always in the news, but certainly been in the news in the
Good at that.
last few weeks. Yeah, he's good. He's good at that. He's very sharp. So I have a buddy of mine who's very into Bitcoin and crypto in general. And I had this conversation with him. He was trying to explain Michael Saylor's business model. I'm like, to me, it looks like a Ponzi scheme. Like it smells like a Ponzi scheme. Everything about it's Ponzi. And now I'm not saying it is. I want to be very clear. It's a publicly held company, and I'm not making any claim here. But but I've been around long enough to know what BS smells like. And I'm not saying it is because I really want to understand it, and I might even try to get him on the show because I just want to understand what he's doing. But to me, it just seems like it's kind of like what the government's doing. Like, banks, I mean, they're all kind of Ponzi-ish. They just are legal Ponzi's. So I guess, I don't know if you know much about it, but maybe you can kind of like walk us through what he's doing and, kind of your thoughts on the whole thing.
Yeah, I think I'll wrap to that because I think exiting on the comment about like a Ponzi scheme, what I'm struck with, I think the way I might limit like a definition of a Ponzi scheme is there's kind of a rug pull moment, or like you pull out, people start demanding money back out of the Ponzi scheme, and then the whole thing collapses. And that, at least like to your point about the banking system, I mean that's there, or like that kind of mechanics there from a deposit run standpoint, and just how counterparty risk sort of exists. And so if like one counterparty starts losing, if everyone starts trying to tap out to liquidity and pull cash from these institutions, these places, then things do kind of fall apart and crumble. Now, what I think, I'm not. There's other people definitely more well studied in it, but as MicroStrategy had a software business, it was profitable, could make profits, and it had cash. And in 2020, he made the decision to allocate a bunch of that cash into Bitcoin and directly hold it. Big move, brave move. That move in itself was kind of partly a catalyst, but also it happened at the same time. I want to say, like, I think Paul Tudor Jones announced his Bitcoin hold. So 2020 was a great year for at least Bitcoin. A lot of those things kind of came together. And look, corporates are holding in their treasury. Big time and big name investors are starting to hold Bitcoin, and people are making a bet on that horse, to use his analogy. And then it kind of went on from there, where he started finding more means to find Bitcoin using market tools. And that some of that looked like Bitcoin secured loan he had with Silvergate for a while. That was one that was on the edge, I think, of risk, because it was still a Bitcoin secured loan. So there was like and it was public, or people had metrics they can measure. Bitcoin's price does this. MicroStrategy gets a margin call, and like Saylor is in trouble, or like they've got to liquidate, or they're how are they going to pay back this 200 multi-hundred million dollar loan? But I think since then, part of the result of Signature winding down, I'm sorry, Silvergate winding down, and these that particular mode of option not being available, he was able to tap into other public markets vehicles, especially these kind of convertible bond offerings, convertible notes as bonds that, as best I understand, look like, you pay into the note, it might convert to equity in certain circumstances, or you get a cashback return. It was actually Matt Levine's article from last week or so that did the best job I've read on like actually explaining this in a good way about it's not because there's a version of the narrative that says, well, who's buying that? Are these just people that can't buy Bitcoin directly? Because he's very upfront. I'm going to use this, these hundreds of millions and billions of dollars of raised from you, and we're just going to buy Bitcoin, hold it at MicroStrategy. So obviously, a lot of other market participants at that scale could by now participate directly in Bitcoin in their own ways. But I understand there's a market for people that arbitrage around convertible note bonds in terms of like the propensity and the odds of which it's going to convert to the equity or the odds is going to convert out as the cash like that comes out of that bond. And so that as an instrument that trades around a highly volatile stock, where like one of the functions in that pricing for that instrument is the stock that bounces around a lot, that there's money made in the arbitrage between those outcomes for that of the binary of that convert. So that's at least a best thing I've heard that makes sense about like where structurally is there capital that has appetite at that scale for the kinds of things he's selling. It might be there, and why we see other like Bitcoin miners, public miners like Marathon and others also succeeding at $500 million quantum note offerings that they then go buy Bitcoin with. And then the idea is that yeah, he's adding to a treasury Bitcoin. He's adding to a treasury in Bitcoin when there's a lot of uh, up in big upward motion in Bitcoin's price. And then there's a meme stock component because it looks like these GameStop, these like things that have over the last year or 2 years gone up a lot, and just in the by nature of him being in the news, as you say, and it kind of carrying through this popular audience. But I don't know that I see a Ponzi mechanic just yet. That's just the only thing where I'd be interested in what you see about that, because then I view, well, I don't necessarily see where the rug pull happens. Either the bondholders just convert into MicroStrategy equity and everyone just gets diluted to like a wild extreme. And it is at least public, what amount of Bitcoin they own, and there's a considerable premium to the book value of the Bitcoin and how you might value a traditional business. There's premium on its current market cap and share price. And there's continued dilution, or his plan involves like conscious, publicly broadcasted dilution to go get those notes and those other capital raises. And yeah, it's a bonanza. It's a frenzy.
Yeah, it's interesting, and I use the word Ponzi loosely to be clear. I'm not characterizing him as doing anything illegal. I think what he's doing is he's very transparent about what he's doing.
Yes, that's what we
Um, so
have.
I don't mean it in like a nefarious sort of way, but I just think about it from structure, right? You think of the thing structural, like you think of Wall Street in 2008. That was a Ponzi. Like it wasn't deliberately set up. There was the rug pull was it was based on assumptions that people were making, and they assumed that they were always correct. So in 2008, the assumption was that real estate always goes up. And so everyone just bet on real estate always going up. But when it didn't go up, people were like, oh crap, right? And they had that oh crap moment. It wasn't that, real estate disappeared. It's just that it went down and everyone was so highly levered
Yeah,
that
the
everything
water.
collapsed. It was the leverage that caused it. It wasn't the prices. And that and the fact that, as they say in The Big Short, it was dog shit wrapped in cat shit. There's a lot of garbage out there. And so I think of that as a model. And there's certainly other similar models, right? But that's probably the easiest model to frame. So here's my thinking, right? So you have Michael Saylor who has a business, Fortune 500 company or whatever. It's publicly held company, and it's profitable. 2020 hits, he starts losing money. He's got a decision to make. Do we just write it out? Do we sell it? I listened to this interview and he talks about all this. And he decided, all right, I'm going to take all this and I'm going to put extra cash into Bitcoin. Well, let's just say for this example, you equate Bitcoin with cash, because just to make things simple, right? Just for illustrative purposes,
Yeah.
right? So he takes his cash and converts it into Bitcoin, which is effectively cash in this example, right? All right, so there's nothing wrong there. I don't see any issue there. And then he realized, wow, my cash is going up in value, my stock's going up. What do? I'm gonna try to find more cash. Well, what do? I go out and borrow money. I'm gonna go borrow money from Wall Street and pay them. I think one of them is like 0%, but let's say 1%. I'm gonna borrow money from Wall Street at 1%. I'm gonna put that cash from Wall Street, put it into my treasury and earn 2%, right? And it keeps working. So I'm going to keep doing it. I'm going to keep converting cash to more cash to more cash. And I'm not only going to do that, I'm going to issue shares and take in more cash. And I'm going to do convertibles and all this stuff. And all that's well and good as long as it's cash. The problem is it's not, it's Bitcoin. And what happens when Bitcoin goes down 70%? Or or hypothetically, and I know no one wants to believe this, but I think you have to have it as a scenario. What if Bitcoin goes to zero, right? What if that happens? It may be improbable, but it's possible, right? It's like real estate going down, right? It's improbable, but it can happen. So
Yeah.
let's say that happens. Well, now you've got a lot of people who are very angry, right? Because it's no longer cash. Now it's just monopoly money that's worthless. And so, it's the success of that model is based on Bitcoin going higher. Because if it stays neutral, let's say Bitcoin doesn't go anywhere. Let's say it doesn't go down, just goes nowhere. It's
Yeah.
cash, right? It's the same thing as cash. So you have cash, but now you're also paying interest on that cash for bondholders and everything else. And you have a money losing company to begin with, which I got a follow-up question on that. Like, why are you keeping that? Like, why not buy Marathon, exchange it for get rid of the software company that's losing money, do something at least Bitcoin related. Like
Yeah.
your whole company is based on just buying Bitcoin. There's nothing else related to Bitcoin. So that's a whole nother issue. But I guess my point is, so you've got this cash. It's in order for it to be successful, it requires Bitcoin to go higher, which is one of the elements of a Ponzi scheme. Is that you're relying on the fact that the prices keep going higher. Bernie Madoff got found out not because he screwed up, it's because prices stopped going higher and he couldn't keep it up. If the stock market kept going up, he would have been in the clear for years. That's how all Ponzi's are found out, is because the stock price drops and all of a sudden, as Warren Buffett said, you find out who's swimming naked when the tide goes out.
Yes.
So that's kind of how I see it, is it requires a certain outcome in order for it to be successful. And I mean, Microsoft just last night turned it down for their, which I expected that anyway. So I'm just curious on your thoughts. I mean, looking at that, it's an interesting idea. I love his creativity. I just
Yeah.
look at it and say there's something that doesn't smell right to me, that I can't put my finger on it. Just I'm studying it now, so I might have more insight a few weeks from now as I'm done studying. But it's just something I can't put my finger on. It just doesn't smell right. Like this can't possibly work. What is the thing I'm missing? What is the risk I'm missing outside of, sort of what he's saying? So I don't. That's why I was curious if you had any thoughts on it.
Yeah. I guess there's a way in which, yeah, and that's I agree with most of what you said, and at least where we're particularly pulling out or teasing out the idea of like leverage. Because what he's kind of leveraged or what's there is just it's really just the shares outstanding and MicroStrategy, and like and the hit there that happens when Bitcoin tanks, as you would just say, over the 70% or whatever, even to zero, but it's like it's the equity holders that just get diluted to max pain. And so there's a big pain moment that happens there, but it's not done in a way that, like, it's just people end up with zero. They just end up with more MicroStrategy shares that might be worth a lot less. And then at least he's public. I mean, one of the great sailor memes out there is it's going up forever. Or like Bitcoin is going up forever, right? So he's also transparent that that is the bet he's making. And that's where I like to be well-rounded in this. Like I've run a business here in Bitcoin for 8 years. It doesn't go up for always. It has gone up since then, for sure, for 8 years. But there are those periods of bear markets. It's a natural organic market that has booms and busts. But that the expectation that it will continue, and it's again, I mean, at least the dollar is going down forever. Like that one I could say without, that is, the fact. And so I think then that's usually one of the upper entry points or the upper ways to like get some comfort or idea of like, all right, well, I at least get why maybe people think that Bitcoin's limited. There will only be the 21 million of them. Dollar's going down forever. The inverse of that maybe implies Bitcoin will go up forever. So just to what degree, what amount, over what time scales, those involve bets, and that guy's making big bets.
Well, that's part of the question. I mean, I'm always looking to poke holes because I'm in favor of crypto and Bitcoin specifically.
Yeah.
I'm a fan. I'm more well-rounded in my opinions. Like I'm always looking for risks everywhere. And even in
Yeah.
Bitcoin, I'll tell clients like, hey, if you're investing in it, you know, you got to look at this as it's a 20 to 1 upside. Like you invest $1, you can make 20, or the dollar could go to zero. But even if it's a coin flip, 50-50 odds, I'd take that. Like just statistically, if you're in a casino, I do that every day. Like the numbers work. But you have to assume that it can also go to zero, and that is part of the conversation. You have to assume that because if you go in and be like, oh, it's going up to the moon, well, when it goes down 70%, as it traditionally does, you're going to be very, very mad. Um, so I guess here's kind of my question. If I've heard a lot. I've looked at the math. I've looked at the geometry of it all and the math, and a lot of people look at flows and all that. And people have assumptions as to where it's going. And Michael Saylor just, I think in the video, he just said 120 or 130 million per coin. I guess it largely depends on the use case. And this is kind of where it comes back to it's not being used for anything. It's just people are sitting there and put it in their vault, and so at what point do people just say this is stupid? Like, why are we're just speculating? It's going to the moon, great, but it's not going to the moon, and we decide to find another Beanie Baby. Like, at some point, something comes along that's better and improves on it, and like, why are we holding our assets in this? We're only holding it because it goes up. And at some point, there's not enough people filling in with the flows to make it keep going higher. And then people are like, this is stupid. It's not going anywhere. I'm going to go. And then people pull their money out. So it just seems like it's more of a speculative asset than actually a functioning asset.
Yeah, I think, but it blurs there at the edges because at least, in your statement of like, well, God, what about this thing I bought and I'm storing on it just keeps going up. That sucks. Or, I mean, there is a version of just like almost like linguistically or just like the emotions at the time are likely to be like, this feels like a great store of value. Awesome. And then my reasons to sell either because it's the 30% per year it keeps going up. If that's suddenly boring to somebody, I mean, that's just interesting, or there's, there can be stage of life or there, turn of the moment decisions that people make. So I think I think that's just like part of in my business. Maybe we're focused on helping people store Bitcoin for the long term, and so that this is the use case we serve. So I'm partial and unbiased because that's like our stance is, hey, holding is a form of using it as a store of value is a way you're getting utility out of Bitcoin. And then I think the things to use it for, and then that's what is subtle about Bitcoin. And when you do look at it, I think for good skeptics, for people that try to be well-rounded in their reasoning, when you try to understand the different pieces that come together to make Bitcoin work, it's pretty elegant and there's a lot of satisfying answers. There's not much hand waving things. There's no like Wizard of Oz, like, things just kind of behind the scenes work. It's math, it's hard cryptography, and it's market dynamics and some game theory that kind of come together and emerge out into the whole system of Bitcoin. So like the idea of like another Beanie Baby or another thing doing what Bitcoin does, which is just provably the best at in the world right now, is creating a scarce raising to digital scarcity. Um, the idea of a cryptocurrency isn't scarce. There's now thousands, tens of thousands of cryptocurrencies. There are different sized networks out there that can claim promises, whether it's Ethereum or otherwise, of having like a robust mining or robust mechanism to sort of protect the integrity of the blockchain. But Bitcoin, at least, again, because of its size, just with the mining footprint it has, all these other properties, it creates something about like the durability, the untamperability of that ledger that you can't really replicate. You can't just go like copy paste. My co-founders always had a good observation about this, but there is actually a perfect copy of like Bitcoin's code. That's the Bitcoin testnet. It's a thing that when you're developing Bitcoin applications, you use your leverage because like as you're experimenting with wallets and things, if you lose some testnet Bitcoin, you're losing things of no value. All the code is the same. There's even things out there that mine these testnet coins, but it has no value because it's the testnet. It's not the one we all agree is Bitcoin. So the thing we all agree that is Bitcoin and then has all the network properties, the billions of dollars in capital investments in mining for it, its tie-ins to energy infrastructure, all those things. It will be really hard to imagine right now, sitting here in 2024, like picturing what is the thing we trade off for that for something of a use case of a scarce digital store of value.
So yeah, and I guess I kind of come back to people consistently use the term store of value, but what you really mean is speculation. Because if you're taking the philosophy aside, right? Let's just remove the philosophy of the fact it's free money, it's free and all independent and all that, because that's a part of it. I recognize that. But if you take it aside, if Bitcoin didn't change in value, no one would touch it,
Yeah.
right? So it's not really a store of value. It's a speculation. And you could argue, well, it's speculation because it's inflation proof. Well, it's not inflation proof. Inflation's not going up 60% a year. Gold is a closer akin to where inflation is. Rightly or wrongly, everyone's got their opinions about where gold is and inflation, all that. But
Yeah.
but the reality is gold's closer. Real estate's closer. Bitcoin is not even close. Like it's not even trying to be close. It is a speculative asset that people are buying because it's going up. I am too. Like if it was sitting there, I was like, well, it goes up 3% a year. I'd say, screw that. I'm going to go put my money in the market.
Yeah.
But even though I'm philosophically in agreement with the reason for Bitcoin, I'm not wasting my money on something that's going up 3% a year. I can do that in treasuries. I can get 4% a year. So,
Sure.
so I guess my argument's always been, call it what it is. You're all
Yeah.
gambling on the future of Bitcoin, just like we gambled on the future of the internet with internet stocks. But I think it's maybe intellectually dishonest for the industry to say, no, 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 storage of value. It's like I I get where the future is, where it needs to be, but I guess I still struggle with, I want to see a use case that's beyond storage of value. Like I want to see people, so maybe this is my question. What are you seeing out there with people that are actually taking Bitcoin and doing something functional with it that is saying this is going to stick around because we can't do without X? Like Ethereum, like smart contracts, other things are built on Ethereum. I know some people don't like it, so we'll remove that. But it has a functional use. And that's what I'm trying to understand is why are people not doing this? Why are people not building infrastructure on Bitcoin other than a store of value and an exchange?
Yeah. Well, I think there's a couple of layers I could add to in that conversation. One that I'm not as practiced in to say, but I would defer to like a technologist to talk about like the possibility or potential for smart contracts on Bitcoin, because that's a use case. That is like a thing people are trying and doing. But I think kind of taking more of the entrepreneur approach is what we took with Unchained, was to say, don't, you know, actually look at the market. I try to like take an empiricist kind of point of view and say, even if we disagree like terminologically, or you might have different constructs for what is a speculative investment, what is maybe a speculative score of value, like just combine the terms you're talking about, because but people are doing it. And so therefore for my attitude and our firm's attitude is that those are customers. This is evidence like behavior. This is evidence saying people are doing is they're storing wealth in Bitcoin, deciding to hold it for a long time. Many people like me and people that work here also do it. Let's have a business that serves them. So like the kind of infrastructure Unchained specializes in is the financial services component of this newly adopted store of value, place to store wealth. Why not help people hold it for the long term, hold it in ways that they can pass it on to their children, hold it in ways that they can maintain their sovereign control or hold their own keys. So they're not susceptible to like a third party exchange hack or failure. Provide services around keeping it in IRA, tax advantage status, provide trustee type services like trust services, trust management. Just now that people have multi-millions of dollars of wealth in these things and are made with wealthy households hold Bitcoin in the US now, there's a range of things that we do for people in their traditional assets at banks and wealth management institutions that you want to do for Bitcoin too. So that's where the kind of just take it at face value that this is behavior that happens, and then let's build something that services it. And so now there is now, in fact, like greater utility to holding Bitcoin, because it's like, oh, cool, it's a thing I can store wealth in. Might increase 10x over my lifetime. Be a great thing for my kids and grandkids to inherit if this family keeps it around. So that's just kind of building on top of that. I do think there are I'll try to be also more specific. I think in some applications, like there's a sense in which one of the things that's happened with Bitcoin is we've talked about cryptography, and cryptography's been around for decades. And there's been, encryption and encryption inside of tools and applications we use, usually in the background, or like now when we WhatsApp with each other or use messaging applications. Frequently now, encryption is by default, so only me and Kirk get to see what message we exchange. And in theory, Facebook can't. We suppose, but like actual email encryption, like me emailing you with an encrypted email where only you or I can observe the contents, that's still clunky behavior. It's been around for a long time. PGP email. There's like a single digit percentage of people that like probably use it on a regular basis still, and it's powerful. I mean, in a society that cares about privacy and doesn't want intrusive like snooping, or at least claims it doesn't. Like you'd think something like that would be more adopted. It's just actually not because it's kind of still clunky and there's a user experience set letdown there. What's happened in Bitcoin is because this is wealth that's secured by encryption and cryptography. And now that there's greater wealth and greater customers for solutions around the cryptography for their assets, that there's actually been a big advance in the last 5 to 10 years in like consumer focused, consumer centric devices for managing encryption, managing keys, private keys. So these are hardware wallets. These are other tools and applications that live in software. I think it's kind of one sort of evolution out of Bitcoin is the consumerization of these devices and tools that I think will come around. And in an era where there's just even more and more fraud with online banking and a lot of like concerns with like how to warrant your identity online, how, in an era of deep fakes and how does, some politician or somebody authenticate a message, things like using cryptography and signing with something that might be physical. That's kind of a convergence here of something that I think has like come out of Bitcoin, and the technologies that are driven by Bitcoin customers, that will like impact kind of the rest of the world. So that's kind of a more indirect way. It's not like directly saying, oh, we'll get real estate on the Bitcoin blockchain, or we'll get some like other like big application use case that Bitcoin handles. But I do think some of these neighboring things will solve things like identity verifications and make other kinds of financial transactions more secure as a result. It just may not look like how we thought things will build on top of a world computer like the Ethereum narrative, for instance.
Yeah, nice. All right, that's good. I like that. So one question I have for you is, when you're talking about Bitcoin, I don't know, do you work with other coins or no?
Don't. Some of our customers likely have them. We've just been focused on it from a technology practicality standpoint. We did support Ethereum for about a year, from 2018 to 19, with our secured loan products. We lent against Ethereum as collateral for a little while, but it was technologically challenging then. I think it is still now. Like even just running your own Ethereum node is not as advisable, and so to try to run it at the same in the same way we try to run our Bitcoin stack was too taxing. And so it's a big tax you pay when you're a custodian that supports multiple blockchains. Is like they are all pretty different. They're all at different stages of maturity and reliability. Bitcoin is the most mature and reliable of any of them. And so it's just the kind of most stable to build on top of. And there's a lot of brand value and just alignment we get out of staying aligned on Bitcoin as a company and with our customers.
So, in your, I always have to ask this, but in your opinion, who do you think Satoshi is?
Oh, gosh. I mean, I don't know. I venture to believing it's kind of like a group, right? But I'm just way less saying it because it's just how could somebody so smart and so genius to be just one person? But that could be that's always there. A lot of context died with Hal Finney, unfortunately. If he were still around, you'd be I think the best one able to guess. But yeah, after that, it's just really hard.
Yeah, I always have to ask. I mean, everybody I've talked to that I think is, pretty smart and insightful, they all say they think it's a group. Um, I have this sneaking suspicion that it's probably some spin-off in our government that created something cool. And, it's just they create a lot of stuff and it just kind of spun out and then they put it out there and it wasn't government sponsored necessarily, but it probably came from government funding. To me, it just seems like it's just I don't know, it seems very likely that that's the case, but
Would
I
a
don't know.
fun twist be if the Bitcoin Reserve ends up being Satoshi's hoard after all, or surprise, already have one.
Yeah. Well, yeah, there's one other thing I wanted to ask you. So one of the things I think about, and this is one of the challenges I think about with Bitcoin in general, is they're only going to ever mint what, 19 and a half or 21 and a half or something like that million.
Well,
Um,
21 million is the hard cap, and we're at about 19 and a half between 19
yeah.
and a half.
So, but you think about it, there's a lot of that's lost. They say, what about a third of it's lost or something that is
Yeah, probably
unrecoverable?
20 is your low, maybe 25%. 30 would be a little high in my estimate, but like it could be that high. Yeah.
All right. So you basically got 5 million that's gone. So you're really looking, let's say about 15 million that's there. And then of course, a lot of that is just people sitting on it, right? They're never going to touch it. So this is more of a market centric thing, but I'm curious because if you've got a very small float, and did people talk about what the float is? Because the float's really what determines the price, because the people sitting on it don't determine that.
Yeah. Well, there's exchange flow, which there might be ways to peek out with order book. The way we've thought about this, there's an analysis you can collect with, it's called the HODL waves, that we helped popularize early on. But basically, it looks at all the addresses where Bitcoin sits and then labels their age. And so you can look at it and over time, as well as these percentages change, there's just these layers of, the Bitcoin out there that's only kind of quote 1 day old because it moved in the last day, or is the Bitcoin that's 10 years old because it hasn't moved for 10 years. And there are some stable trends that, yeah, much as usually 65% or more of Bitcoin doesn't move in a year or more. And then why it's called HODL waves is you can kind of watch as like the major shifts in that and like the tectonics or the layers of these age of Bitcoins, the shifts happen concurrent with like price action. So as price greens up a lot more, a lot more Bitcoin gets suddenly young again or gets suddenly fresh, just like old Bitcoins have come off to be sold and kind of move. So it is neat. I think I've always been curious since we first kind of dug into that analysis, like what the equivalent would look like for GE shares or Tesla shares or these things. I know, and maybe you know better, like how current float is measured in those kinds of contexts. But I also know, like, certain GE shares are held by long-term pensions that have held for 10, 20 plus years. So there's something like that. So looking at it, it's just the unique thing with Bitcoin is it's a public blockchain limited. We can all go get that data as quite public, and we're not trying to dig it out of some DTCC archive or wherever those registries would be kept.
Yeah, I mean you can't tell because it's all held in a book. It's all held by the broker dealer. So whoever's, if I have 100 shares and you got 100 shares at Schwab, it just shows up as 200 shares at Schwab. Schwab owns it, not us. Like we own it through Schwab, but Schwab, that's the name. So you can't really tell from that perspective. But I wish it'd be very interesting. Um, so a few more questions. We'll wrap it up here. So one, a friend of mine wanted to ask, so what are you guys doing in regards to lending, to people on your platform, people who have shares, who have Bitcoin and aren't looking to sell, but looking for kind of lending options?
Yeah, so this is the real first product we launched with. Our intuition was that we're looking at this opportunity in 2016 that long-term Bitcoin holders, had a more valuable asset that they wouldn't want to sell if they wanted to make a purchase. And so getting a secured loan would be one way to do that. And a lot of wealth, it's a classic wealth management, product kind of thing. It's your other stocks and things. And so we've been doing that activity since 2017, always at somewhere in the range of 40 to 50% loan to value. Our interest rates have gone up and down with the markets. They're at about 16% APR today. And the product shifted over time. We started doing consumer and commercial. We're just commercial only over the last year and a half or so. And yeah, we've never lost, never had any loan losses, knocking on wood, like even though, we have we have margin calls and we've gone through margin call periods, but never had like a actual loss that's been incurred. So it's great collateral. Friends of ours that have been longtime bankers and lenders that are familiar with the space and kind of lending we do, you would say it's one of the best forms of lending that they've ever seen or could do. It's just there are a lot of capital markets challenges. Bitcoin hasn't been a very friendly thing for bank contexts. So a lot of traditional banking institutions aren't active in the space. That keeps kind of cost of capital high. Um, and so yeah, it's been a good product, a good business. There's more to do. There are other places that lend by now, but not always in the way that Unchained does it. That part's pretty unique.
Nice. So one final question before we wrap it up. Now, you mentioned you also deal with a lot of unique challenges for inheritance planning. Can you talk about that a little bit and what people should be thinking about? Because there's certainly a lot of long-term Bitcoin holders, and what should they be thinking about from inheritance or estate planning or things like that?
Yeah. So kind of the fun part. Bitcoin. This kind of thing happens in the background often, like traditional finance, where like who is the title holder? But those things are kind of intermixed, like where the title and the asset is, like to your points, like with your broker dealer, with your brokerage account. So for these kinds of problems, you just have to label your beneficiary, and then there's a process with like the estates team at Schwab that like handles transfer of assets to somebody at that can make that decision for the estate. At least in the Bitcoin context, there's a difference between physical possession of the Bitcoin and then the title holder. And like part of the Unchained service we help provide is kind of actually rejoining that for people so that like when you need just like a statement or if you declare I've moved 100 Bitcoin into this trust, Well, what really says that happens if you still hold the keys? Well, a lot of people set up their trust entities on Unchained, so they hold their own keys still, and then the account is in the title of that trust. And so they get statements, PDFs, and then when we work with our clients, it's in this it's method of custody called collaborative custody, where the client still holds a majority of keys. We are left holding one. And so the client can go to their next of kin or leave instructions around just one of their keys, but not both, because that's the risk. If you are holding the Bitcoin yourself, now you're either fully reading someone else in into how all your Bitcoin is stored, and that might be a security risk, or just opening up other ways for that Bitcoin to be accessed you don't want. But if you only have to give someone a partial share, a partial key of your how your Bitcoin is secured, and then that party, when in the event of your death, they can come work with Unchained, and neither of us have, without the other, enough to move your Bitcoin. That's kind of one way you sort of cut the knot here on the trade-offs of issues. Because yeah, it's with a lot of these issues, it's just like, yeah, you're either being very disclosive with people of how it's secured, or you've just left it with an exchange and have, some exchanges by now do have forms of beneficiary declarations, and Coinbase by now, like us, have gone through cycles where clients have died, and there's had to be these kinds of probate or other estate issues that come through. So yeah, I think just for anyone, a lot of our clients, the advice is usually, well, treat it a lot of like you would with a lot of other assets in your estate plan. Be clear about where this is supposed to go in the event of death, and then for the actual physical security and how that gets transferred. I mean, we can play a role, but a lot of other storage methods can play a role. It's just really hard to, if you are doing it all yourself and there's no third party involved in your custody, you might be leaving your heirs with a challenge, and like there's a chance they just couldn't recover it.
Yeah. Oh, that's great. Well, we're going to wrap it up here, Joe. Final thoughts from you. Where can people find more about you?
Thanks, Kirk. Great to be here. I am on X at Joseph Kelly. My company, Unchained.com, is also on X, Unchained.com. And yeah, reach out if we can provide any help.
Awesome. Well, I appreciate you coming on the show, sharing your wisdom with us. We'll definitely have you back on. Bitcoin's not going away anytime soon. So at least now that it's
They,
been accepted by the BlackRocks and the Fidelities of the world, I think we're here to stay. So, but I appreciate you kind of sharing your wisdom, and this is great. I know it's going to become a bigger topic as we go on. So we'll have you back. So thank you.
Thanks, Kirk.
Hey, Doug, did you hear? We're giving away free money. Well, I'll tell you about it in a minute, but before I do, there's a saying in the mining community, well, precious metals mining, that is. The saying is that if you want the best deals, you have to be in the room. Now, you're probably thinking, what does it mean to be in the room? Well, I'll tell you. Being in the room means that you're on the short list of people who get invited to be a part of the best deals. These are the deals that most investors will never have access to. You mean like IPOs? Nope, IPOs are chump change. Those are for retail investors, small potatoes. That's nothing compared to these deals. These deals would have you salivating to get access to them. Once you know they exist, you will never look at investing the same way again. I almost don't want to even tell you that they exist because it will ruin your thinking of how the investing world really works. Now, you might be excited that these deals exist, but you only have access to the deals if you're an insider, or in the room as they call it. Now, as loyal listeners to the show, I'm going to give you a chance to be in the room. Money Tree Investing Podcast has created the Insiders Club. This is a community of our show's members who are loyal listeners of the show and want to get more out of their investing experience. Being a part of the Insiders Club gives you insider status for upcoming events and webinars, discounts, free stuff and books, and influence on the future direction of the show. This is a great opportunity to join us as we expand our content and services. Oh, and did I mention free money? Yes, in the next few weeks, I'll be giving away free money to our members of the Insiders Club as my appreciation for listening to the show. Now, there's no cost to join the Insiders Club. Just go to moneytreepodcast.com/free money today to join the community. That's www.moneytreepodcast.com/free money. I hope to see you in the room. All right, well, that was a great interview with Joe. Really appreciate him coming on the show. Now we're into the panel portion of the show where we have our very own Barb Freeberg. Hey, Barb.
Hi, how you doing, Kirk?
Doing great. Doing great. And it's just me and you again today. You know, the holiday spirit, people are out doing their things, celebrating, partying, and it's just you and me here partying by ourselves. So,
Okay,
so,
well,
so
happy to be here, and you and me talking Bitcoin is fine with me.
it's good. It's good. Well, we're gonna get so what was your impression from the interview, Barb? What were your takeaways?
I loved the conversation. I thought the conversation between you and Joe was very comprehensive. The one standout remark that you made was when you talk to people about Bitcoin, you say, okay, it's speculative, but the odds are 20 to 1 that it's going to go up, and I'll take that bet every day. I wanted to ask you though, Kirk, did you just pull those odds out of the sky, or is there some basis for you saying that? Because I thought that was genius.
So here's how I look at it, and I want to be clear. It's not the odds, it's the outcome. So just I'm going to walk the listeners through this. So if you think about flipping a coin, right? You flip a coin, you have a 50-50 chance of getting heads or tails, right? So you have 50% chance of winning, assuming you pick heads or tails. If you pick some other option, I have nothing for you. So you have a 50-50 odds of choosing head or tails. Now, that's only part, if you're going to the casino, that's only part of it. The next part is what is the outcome, right? If you get it right. Well, the casino's not going to give you 2 to 1 odds, right? If you win $2. If you lose $1. They're not going to do that, right? Because that's not going to be in their favor. Now, it might be 1.5, right? They might give you $1.50 if you win, and if you lose $1 because they're gonna make 50 cents, right? So they have to have it so that they're making money on it. So it can't be completely 50-50 and 2 to 1. And even if it was, you wouldn't win any money. You'd play a million times and you'd end up with $1 because the odds are it's going to be 50-50. The more times you play, the more times the odds are going to be, it's going to be 50-50, and a 2 to 1 means you're going to break even. So if you look at Wall Street, Wall Street considers a 3 to 1 scenario to be ideal. So if they're going to invest $1, they want to make $3 on the upside and they want to lose $1 on the downside. That is the ideal scenario. Any options investor looks at that and says, if I can find a 3 to 1 or more, that's great. If you look at marketing, marketing dollars say, if I invest $1 into marketing, I should get $3 in return. The 3 to 1 is a general number for a lot of different outcomes in different industries. For whatever reason, I don't know why, but that's just the way it is. So if you look at um, Bitcoin, for example, right? So listen, we took the coin flip. So if I take the coin flip and I say, if I choose heads, and I get $3, and if I'm wrong, I lose $1. I will sit in the casino all day and mint money as long as I humanly can because the outcome is defined, right? 50-50 odds I'm going to be right, and if I'm right, I make $2, $3. If I'm wrong, I lose $1. That's a guaranteed printing money, right? That just if you do the math and you do it, if you do the coin flip a million times, you're gonna make a boatload of money. Okay, that's how if you were to be in the casino and found those odds, you just sit down and never leave. If you do that in Wall Street, you sit down and never leave. That is the ideal outcome. Now, of course, you're not going to win every hand, but over time, your outcome is defined as you're going to make lots of money. Now, let's take that example and let's plug Bitcoin into it. Okay. Now, if you look at any sort of stock, you can't assume it's going to be 3 to 1, right? It's not how the outcomes work. But if you look at Bitcoin, I can define that odd, right? So here's how I would define it. Let's say Bitcoin's trading at 100,000, which give or take is where it is today. I know it's a little bit less, but let's say it's 100,000, just to make the numbers round. Um, so it's trading at 100,000. Okay. Now, let's say my thesis is in a if everything comes to pass as people predict, we're looking at somewhere between a million, or if you listen to Michael Saylor, 21 million or 23, I forget what he said, but let's call it 23 million a coin. Um, my thesis is always $1 million a coin is a good target. So, uh, my thesis a while ago, it was Bitcoin wasn't at 100. It was at 50,000 or 20,000. So anyway, so my thesis is always 20 to 1 upside. So if I invest 100,000, let's say, and I buy one coin, and you can buy less, you can buy a dollar's worth, but let's say 100,000. I put in 100,000, I buy one coin. Um, on my ideal scenario, it's going to go to $1 million, which means I make 10 to 1, right? On a return on my money, which is great. Anyone could love that. However, I also have to acknowledge the fact that it could definitely go to zero. So if I invest 100,000, I could lose that entire 100,000, right? Because it could go to zero. And any investor has to acknowledge any investment you're in could go to zero. Even US Treasuries could go to zero. We could default. The probability is really, really low, but it could happen. Okay. So Bitcoin could go to zero, or it could go to $1 million. So 10x on the upside, 1x on the downside. Now, the only missing piece here is, what are my probability of success, right? If flipping a coin, are my odds 50-50? If my odds are 50-50, I'm going to sit down and put every dollar in there and light up the casino every single day, because that's a gold mine, right? 10 to 1, 50-50 odds. Now, I can't tell you what those odds are. I don't know what they are. I have to guess what those odds are. Is it 50-50? Probably not. But for this sake of example, I'm going to say it's 50-50, because honestly, the odds are too hard to calculate for me. Maybe some people can do it, but I would say anybody who has an opinion on this is biased, because you really don't know. It's a guess. It's a new technology. It's like saying, oh, the internet's going to be the center of attention for everything. Well, when the internet came out, people were like, I'm going to play games between colleges. That's what I did when I was in college. I'm going to game you. You're in the next room. Let's play games. Like, it wasn't like, hey, it's going to control the world, which it's pretty much the center of everything now. We didn't know that. So you can't predict where things are going to go. So I'm not going to try. But let's just say it's 50-50. I think it's better chances of 50-50. I think it's maybe like 60-40 or 70-30 that Bitcoin's going to go up. But let's say conservatively it's 50-50, because I can't guess either way. It's really hard to predict that. So 50-50, then I just sit down and mint money. So that's how I'm handicapping Bitcoin. It has nothing to do with my belief. It has nothing to do with me thinking that, I'm going to change the world. It has nothing to do with that. It's just flat numbers, odds, probabilities, as if I was a casino. That's all I'm looking at. I'm looking at unemotionally, what are the odds of this being successful? And that's how I'm looking at it. Now, if you listen to everybody, if you listen to Raoul Pal, if you listen to Michael Saylor, if you listen to Joe Kelly, if you listen to all these Bitcoin people who are really in the weeds and they understand it much better than me, they might be right. I don't know. I'm not as smart as them. And I don't want to be as smart as them. I'll listen to them. But I also know they have a bias, because they believe. They are true believers in the technology, in the cryptocurrency, in the systems, in all of it. And I'm on board. Like, I'm not denying it's true. I'm just not smart enough to know whether that's true or not. I see the arguments, I believe them, but I also know that, we're also early. It's like saying in 1990 that we know computers are going to rule the world and we're going to have a iPhone in our pocket. We didn't know that. We had no idea. We're just like, I got an Apple II GS in 99 and I was playing games on it, writing my term papers, and most people didn't have computers. So we didn't know where things were going to be. They certainly didn't have iPhones. That was like, whatever, 10 years later. So I have to look at things and say, I don't know a lot. And I have to be honest. Like, I don't know all this stuff. I want to believe in it. And I do. And I think Raoul Paul's right in his thesis of technology is going to eat the world. And if you're not investing in technology, inflation is going to outpace you. I totally buy into the argument. And I believe that. But I also know that you could be horribly wrong. Like, he could be horribly wrong. Like, we're at the most expensive market we've ever been. And it could get more expensive, or it could crash and burn like it did in 2008 or in the early 2000s, or all these other times the markets crash. It could crash, and we could get horribly hurt financially. So you have to look at both sides and say, where am I wrong? And I know that I'm not smart enough to know definitively, which is why we bring on people like Joe Kelly and we bring on people like Paul Rosenberg and others that are really smart. I mean, if I had to, like I look at Paul Rosenberg, I'm like, that guy could be Satoshi for all I know. Like he's one of those cryptographers. He's really smart, right? And he's an old school hippie. So he's a great guy, by the way, and I love having him on the show. But I listen to a guy like that, and I'm like, he's not even telling you how smart he is. Like I've talked to him. I know how smart he is. He's so smart. And I look at him and say, here's a guy who believes in the technology, believes in the good it's going to do the world, and I can't buy into that because it's too biased to be a handicapper, right? To be the casino, and I'm looking at the odds and saying, if I had to bet, where am I going to put my money? Just like every day, what's the probability of success of my investment strategy versus some other strategy? Everybody does that every day, whether you make a change or not. So that's how I handicap Bitcoin. That's how I look at it. That's why I said it's 20 to 1, and I'm open to the idea that it could be 200 to 1 at this point because Michael Saylor's like, it could be 20 million plus per coin. I can't see that far ahead, and to me, a million's a big deal. So 100,000 is great. I think it's probably got to pull back at some point and then it'll go up again. I don't know. I mean, it's a guess, right? It's a gamble. It's internet money. So I don't know what that means. I can't hold it. I can't pick up a coin and know what it is. So I don't know where it goes. But I'm willing to take the ride because the odds suggest that success is a higher probability outcome than failure. Even if it does fail, and I'm okay if it fails because I get it. But as things progress, there's a less likelihood of failure as it goes higher because more people are buying in. So the network effect and all the other stuff, and the government may buy in, Trump's supporting it. So you've got all this positive momentum. So I think the probability is greater than 50-50 that you could have a 10 to 1 outcome. But that just means my success rate goes up and there's more reason to do it. That doesn't mean you put all your money in it. I want to be really clear. Don't put all your money in Bitcoin. You have to be thoughtful about it, but you have to look at it from an odds perspective because how else do you look at it? There's no earnings, there's no income, there's no revenue, there's no expenses. It's just this internet money that people don't understand. So you have to kind of look at this logically and unemotionally, and that's how I try to look at it.
Wow. Well, where do I start? First of all, I have to just bash one thing you said,
Please
and
do.
then we'll get on with the rest of my comments, which is the market is not valued at the highest level ever. The highest level was in 1999. But according to the Schiller PE, which I'm not going to get into, it's 100% valued over its median, or I'm sorry, over its mean valuation. So it's worth, if you use that metric, which is a good back of the napkin idea, the market today is about 37 Schiller PE, and the average is about 16. So yeah. And what we've seen historically is the market reverts back to the mean, but we have no idea when. Okay, so get that out there. We all agree the market is overvalued. Back to Bitcoin. It's gambling. I like that you put that out there. I like that you put out that today there is really no use for it. You're not going to go buy a pizza with Bitcoin if the chance that it's going to be worth, 100% more in a month. You'd be crazy to do that, okay? Is it a store of value? We don't know yet. It is a huge unknown. The things we do know is it started at like $1 and it's now worth, one Bitcoin is like worth $100,000. So note to self, I was asked about Bitcoin by one of my friends, I don't know, maybe 8 years ago, should I get in on it? My answer was too speculative. And I hope he didn't take my advice because that was when it was at 1,000. So yes, it is very speculative. And on the flip side, Kirk, I hate to admit this, I agree with a lot of what you said. Okay. You have no illusions of what it's going to be used for. You're looking at the odds and the chance of making money with Bitcoin. That makes sense to me. Okay. You're also understanding that it could go to zero, as could any of our investments. They could all go to zero. So that's the reality, the uncertainty of life. I have not invested in Bitcoin. Let me tell you, am I sorry? Hell yeah, I'm sorry. Who doesn't want an investment that you can invest $1 and it's worth $100,000 10 years later? Okay. Am I going to invest in it? I'm on the fence because I still don't get what it is used for. Now, when it pulls back, I don't think I'm going to go to the wallet thing and all that. But if it does pull back, I might put some money in the trust, the whatever, the grayscale trust, or I might buy an ETF for the speculative value. But I am under no illusions that it has been widely enough adopted to have any real use as of today. So, in terms of speculating, my belief on speculating as a multi-year portfolio manager investor since the early 1980s is that nothing wrong with going for speculation. Speculation is akin to gambling. Just don't do it with your whole investment portfolio. I personally have 5% of my investable assets in things that I consider more speculative. Now, those include right now just individual stocks. Some of those have increased tenfold. All of them have gone up quite a lot because the ones that didn't, I sold. So, just to put it out there, Kirk, it's a personal decision if you want to invest in Bitcoin or not. But know that it has a likelihood of it has a possibility of going to zero, and it has no functional use as of today.
Yeah. Well, we're getting close, listeners. Barb's on the fence here. We're swaying her week by week. Eventually, she'll come up. She'll be like, "I just bought a pizza with my Bitcoin." By the way, don't be the Bitcoin pizza guy. That guy. There's a story about the guy who bought a pizza with Bitcoin. You don't want to be that guy because that's worth a lot of money today if he had kept that.
Well, I remember also reading about this couple who traveled across the country using just Bitcoin as their currency. And I'm thinking, do you have any regrets today?
Well, I think if you're smart, you would have just bought extra to do that with, and it was just more for sensationalism. I mean, doing that and spending it. Somebody who's a true believer in using it, I'm sure they didn't just spend their hoard. They probably just like did it and bought extra and said, "Oh, we're going to try it and make it cool." I agree with you. I think that the challenge. And this is why I look at it as a casino bet as opposed to a bias bet is because I have these arguments with people all the time. Like, what's it used for? And they're like, well, it's a store of value. No, it isn't. It's only a store of value if it's going up. Like, what if it goes down? And of course it will. And then people say, well, it'll come back. Yeah, but what if it does? What if it goes down? What if we come up with some new sensational cryptocurrency that blows the doors off everything? And it's the next thing since sliced bread. Well, Bitcoins will be worthless because it's not used for anything. And this is my argument against it, right? I'm being honest, being unbiased here. Like there's two sides to everything. What is going to cause Bitcoin to go to zero? Well, if you come up with a better solution, that's one way. The government could tax it at 100%. That's another way. Like people don't want to admit, well, there's nothing the government could do. Yeah, they can. They're going to tax it at 100%. No one's ever done that. But I mean, even China didn't do that. They just said you can't hold it. Of course, people are going out and buying Bitcoin in China because they're keeping their wealth. But I think the storage of wealth is kind of a tough argument because it relies on the network effect, relies on other people, and it doesn't because it's not being used for anything purposeful. Um, it could turn into. I want to be clear. I'm not crapping on Bitcoin. Like it could be used for something purposeful. It's just not currently. So people are basically guessing. They're gambling on the future, which, it's like gambling on the future of the internet. If I could have bought a piece of the internet, I sure as hell would. Back,
Well,
go ahead.
and the other thing is, although they say it's perfectly secure and it can't get hacked, look, I don't buy that. I don't understand all the back end of everything, but tell me if I'm wrong, Kirk. Is there anything that is 100% secure? Because I will tell you, the hacking out there, where you're talking about having the Pentagon hacked and the most secure of secure sites in the government hacked, I mean, is anything safe?
So I think, Barb, this is this is where you should do more research. So the reason that I like blockchain, cryptocurrency, the technology is because if it's done right, it's virtually unhackable. Um, and so if you think about like protection, right? If you think about like uh speeding, right? So back in the day when I was young, people would speed. And then the cops, they had the radar guns. Be like, "Oh, we're going to catch the speeders." So what happened? They came out with radar detectors. Oh, we know if there's a radar detector. Great. So then the cops, you slow down, the cops don't catch you. So then what the cops do in some state? Well, we're going to have a radar detector. We're going to find out if you're using one. We're going to fine you. And then they're going to have a radar detector. And then it had all these. So there was this war back and forth of trying to like fight the other side. And this happens with any sort of security, right? If you have security, and my dad was a criminal defense attorney, and he always used to tell me, because I was like, why don't you have like any sort of alarms in the house to protect against thieves? He's like, it's like if somebody wants something, there's nothing you can do to stop them. Now he was defending criminals, some of which were thieves. He's like, if somebody wants something, they have enough time and money, they will get it. There's nothing you can do to stop them. And I said, well, what if you had this? He's like, they cut a hole in the roof. I'm like, oh. So there was always something. He's like, look, I could sit here for hours and beat up all your ideas. He's like, just know that that's how things work. And so he's like, so really all alarms are doing is preventing, vagrants and people who are just joyriding and just trying to break in, but they're not really professional thieves. Professional thieves know what they want and they're going to get it. So I was always fascinated by that. And so conceptually, if you think about it this way, Bitcoin's been around since 2008 or 2009, whenever, I think it was 2009. So, we're going on quite a few years, right? You're going on 16 years. So, if you have something like that, it hasn't been hacked yet, right? So most people are trying to centralize their protection, right? We've got this protection network where what Bitcoin does is it decentralizes it. So instead of protecting my information from hackers, I'm saying the whole world has my information. And so the hackers can't get it because 10 billion, whatever, 3 billion people or however many people are out there, 6 billion, something like that. So 6 billion people have access to this data. So if a hacker tries to get it, say, nope, you know, 5 5.99999 billion people have the right answer and you have the wrong answer. These people are checking against the hacker trying to get in. So they can't break it because it requires 51% of people to say no, you're wrong in order to hack it. So now if the government owned 51% of Bitcoin, I'd say, all right, I no longer trust this thing because now the government's got a monopoly on choosing a direction. That would be a bad thing. So my hope is that that never happens because that would be the failsafe. But as long as 50.1% of people are checking the data to secure it to make sure it's accurate, then it's unhackable. Now the hacking weak points, and I'll tell you this because hacking in any system always comes down to finding the weak points. So you could have the best security in your company, right? And it's unhackable. No hackers can break my software security. But hackers are smart. They just call some intern and say, "Hey, I'm from IT. I need access to your computer. Can you give me your login so I can get in there?" And some low-level intern doesn't know any better. It's like, "Oh yeah, sure. You're from IT. Sure, I'll give you my information." And then they get in the door. So it's not about breaking the software. It's about finding the flaws in the system. And this happens all the time. All because all they're going to do is they're just going to cold call everybody in the company until they find some dummy who's having a bad day or just doesn't know any better, and they're going to say, "Oh yeah, sure, I'll give you all my information when you get in." And then they get in, and then it's over. And then now they get the back door, and they. So with Bitcoin, the weak points are the exchanges. Exchanges have been hacked because that is a centralized place where there are flaws in the system. So the solution to that is don't hold your Bitcoin on an exchange, right? You hold it in a cold storage wallet or you trade it and then you take it off. You don't leave it there. That's dumb. And people have found that out through Mount Gox, which was hacked, and a few other places were hacked. Another security flaw is telling everybody you own Bitcoin, and then somebody comes to your house and they ransom you for your Bitcoin. Say, we're going to kill you unless you give us the Bitcoin. That's another flaw. Don't tell people you own it. Like, and so don't be that dumb. Or, I mean, I tell people I own it, but I don't own the physical. I own it on a security. I own it in an ETF. So it's no different from me owning a stock. If you want to, ransom me for my portfolio, good luck to you. You know, like that's gonna be really tough to get that out of me, and I'm not worth that much. Go find Warren Buffett. He's worth more than me. Like so. When you really look at the flaws in the system, Bitcoin itself, the technology is at the moment unhackable, and no one's. And here's how I find it: if no one's found a way to hack it yet, it's unhackable. Are there ways to potentially in the future? Maybe, but I don't see a way that's going to happen because even these quantum computers, which people say actually don't exist, it was just a PR scheme. But if that ever were to happen, you'd also have quantum computers who are defending it. So you'd have to be like I don't know what the number is, 200 like 300x better hacker ability than anyone else. So it's just pretty much not going to happen. So is it possible? Yes, but the odds right now are close to zero. I wouldn't. That would not be my bias against it. I would not hold my breath on that happening. I would say I'll take the other side of the bet any day on that one. If that answers your question, Barb.
I'm good.
Sorry, I'm doing all the talking. I do want to call you out on your most expensive. So not because you're wrong, but because we don't talk about it much, but the valuations of the market, there's multiple different valuations, and some are the most expensive ever, some are not, like you said, and I agree. It's the second most expensive, I think, for the Schiller PE, if I'm not wrong. I could be wrong on that, but I
You're
believe,
right on that.
yeah.
I will
But
give you that one.
but there are some
Okay.
metrics we are the most expensive, and I
Well,
don't have
that
the numbers
could
to
be.
release on.
Yeah, because I don't disagree that there are various valuation metrics. And they're not all going to deliver the same result. That being said, the market's expensive now, and all that means is it's really highly valued in contrast with its intrinsic value.
Yeah. Yeah. I mean, if you look at any metric, it's expensive. I mean, the Warren Buffett metric, it's like 100% overvaluation, and he uses the total market cap over GDP, I think is his metric or something like that. It's total market cap over something. I think it's GDP. Is it GDP, Barb? I forget. Yeah.
Something like
Yeah.
that. Yeah.
So
I'd have to look
basically,
it up.
yeah. I mean, it's a good metric, right? As a general thesis, you're looking at total market cap over GDP. So you're saying, all right, if it's growing at this rate, it should also grow at this rate. So right now we're at 200%, where the rate that's normal is right around 100. Now they've kind of altered their numbers because it used to be around 100, give or take. Now they've bumped it up to 120. And this gets into the valuation metric, which I mean, maybe we can talk about it for a minute. Um, are the markets ever going to sell off again? You got this relentless bid from indexers that are pushing markets up. And so do we ever see another 50, 60% correction because everyone's dumping money in
Yes,
index
we
funds?
do. I now this I'll put my money on
Okay.
because I don't know where, I don't know when, I don't know how, but statistically, theoretically, over over 100 years of data tell us the market corrects, businesses correct, and typically it starts with something we didn't predict. So I don't know when, I don't know where, I don't know how much. And if you go on the internet, there's a million people saying a million different things. But I do believe you have to be prepared for all eventualities. The future is unknowable in every single realm. We don't know what's going to happen in the future, but we can make educated guesses. And to think that businesses, which are the underlying entities that drive the investment markets, are never going to have any problems in aggregate or individually is just wrong.
Yeah, I raised the point in part because I never liked the phrase, this time is different. I think that's a foolish phrase to state, well, this time's different. But I do have to acknowledge a point that I've been talking about for like the last 15 years, which is the markets have got really screwed up. And indexing has been a large part of that. And it's not the indexer's fault. I know everyone wants to find blame, but it's just the reality of the markets, right? It's just things have happened a certain way. What happens if everybody becomes an indexer? We have to philosophically explore that scenario. And I look at it and say, well, if people are just dumping money in indexes, that means the big tech keeps going higher, which means you should put all your money in big tech because it's getting all the money. What is going to cause the markets to crash? I mean, COVID, they went down 30%. That's nothing. The whole global economy shut down. Everyone was in their house. No one's working except, the emergency responders and people like that. But basically everything shut down. And the market only went down 30%. Really? Really? Only 30. I would have expected 50, 60, 70%. That to me seems like a more reasonable outcome for that. And yet it was only 30 or somewhere thereabouts. So I look at that and say, that's crazy. 2008, it went down 60% or 58 and a half, somewhere thereabouts. Um, so 60%, and that was deserved. And that was a banking crisis where the whole global banking system imploded. What's going to cause that to happen again? I don't know.
I've got an idea.
Okay, great.
Okay. Look at our
Let's destroy the economy.
society. We are heavyweight baby boomers. Okay. There are a lot more baby boomers, I believe, than there are any other generation except maybe millennials.
Millennials are bigger.
Okay. So
A little bit bigger. Yeah.
millennials are a little bigger than boomers, but the boomers are approaching the time of RMDs, required minimum distributions. So they have to start selling their stocks. And we have a declining workforce. So fewer people potentially are using those 401ks to put money into the index funds. And so if more people are withdrawing from the stock market than are putting money in, just by basis of supply and demand, stock values will fall. So I think that is one potential impetus for declining stock prices.
So, I mean, we could see a lot of things happen, frankly. I just I just look at it and say the worst thing we've seen since the financial crisis, and it didn't result in bad things. I mean, I could see interest rates going to 15% and that causing markets to go down 60. Yeah, absolutely. But even then, I wonder, like, the long bond, I mean, mortgage rates are up 7.5%, 8%. The long bond's up at 5. It would have to go, like, if we went up to 10% on the long bond, it would completely destroy our economy. So yeah, that could happen. Um, but I find it hard to imagine that's going to happen. I
Well, it
mean,
has happened though. The long bond hit a high of 12% in the late 70s.
it,
So
but that was a different time with different situations, and
sure, sure. But my point being, we don't know the future.
yeah,
And I cannot buy into the idea that we are in a long-term up market without any significant reversals.
yeah.
Just
It depends on what the
can't see it.
reversal is. It depends what that means. Like 30%, I could see that. 50%, I'm finding it hard to imagine. And I'm not saying it, China invades Taiwan or Japan. Like, we go into World War III, you start launching nukes. Yeah, I could see it going down 60%, but I think that's a low probability bet. I think, the world doesn't want to go to war despite what people are saying. and everyone wants to just, sit around the campfire and sing Kumbaya. I mean, I don't think Putin wants to go to war either. The only people who want to go to war are the I don't even call them neocons anymore because they're not, when Cheney went and supported the Democrats, he's no longer a neocon. Now it's something else. Now it's just the war hawks, I guess you call them. But there's people in government that want war because that's how they profit. But if you exclude that, no one really wants to go to war. No one wants to nuke cities. It's just dumb. And we're just in a different place than we were, like, 50, 100 years ago. So I think if you look at the reasons it would go down, valuations agreed, but it wouldn't be a crash. But if we saw inflation pick up again, I could see the markets going down 20, 30%. I think that's reasonable. It would have to pick up a lot to really crater the markets just in interest rates. I will say this though, I have been fascinated. I have this thesis, and I hate trucking it out there, but I'm just going to mention, and we'll tie it up. Um, is when Powell lowered rates 100 basis points and the long bond went up 100 basis points. This is the first time in recent history, because I don't remember when it happened last, but in recent history, it's the first time it's happened. Now, what that means is Powell was wrong and the bond market was right. The bond market is always right, right? It doesn't matter who Powell is or you and I are. The bond market is always correct. Because it's a marketplace of millions of people making decisions, and bond investors are typically the smartest people in the room. So Powell was wrong. It was clear as day that he was wrong. Now, I look at that and say, I think he was trying to influence the election, because why else right before an election would you dip at 100 basis points when, my opinion, you didn't need to do it at all? And I've said this on the show. I thought last year we'd have 0% rate drops, period, because they didn't need to. Like, it should be 5% right now, or 5.5%, or in that range. It should be there. It shouldn't be where it is now. We'll see. I mean, inflation's starting to pick up. We'll see what happens, but I think it should be higher. The bond market thinks it should be higher, which is better than me because I'm just some Yahoo, but the bond market's smarter than me. They think it should be higher. So I don't know. My thesis, it gets a little tinfoil hattish and it's too far to reach at the moment, so I'm not going to put it on. But you know, I think that we have to be really mindful of where the bond market's going to go in the next year or two. I think there's going to be a lot of big dramatic changes with the new administration. We don't know what that entails yet, and I can guess we do on our live show, but I certainly am not going to hold my hat out for, like, betting money on it, because I think it's just too tenuous at the moment until they come up with clear plans. But I do think that, circling back to Bitcoin, I do think that it's an interesting asset class. I do think that there's a lot of opportunity there, and I do think people need to consider it, even if nothing else, just a small portion in portfolio. I mean, if you think about it this way, let's take my thesis, and I'll give it to Barb to wrap up. Let's say you put 1% of your portfolio into Bitcoin, and you're wrong, and it goes to zero. You lose 1% of your portfolio. Now, if you're invested 100% in the market, you're going up or down like 2% in a day. What's 1% loss? It's nothing. It is noise. It's nonsense. So if you think about it in that term, I could lose 1%. Okay, whatever. It's 1%. It's nothing. If you lose 10%, 20%, okay, that'll start to hurt. But 1%, if you don't know, just put 1% in. Just try it out. Just test it. Get comfortable with it. See if it's something you want to do. And if you don't want to do it, don't do it. Don't take my word for it. But my point is, you can do things in a small, like, even Barb, you could buy $10 worth of a Bitcoin ETF, right? You could buy one share of one of the ETFs and just try it out and sit with it and follow it and give it, it's like betting on a football game, putting $10 in the football game. You're not gonna break the bank either way, but it's more fun to watch when you got money bet on it. So maybe look at it like that. Just try it out and see, like, what do you have to lose? That's a low risk way to get into the market without worrying about whether it's going to go to the moon or zero. You're not going to make a lot of money, to be clear. You're not going to make a lot of money by doing that, but you're not going to lose a lot. So it's a way for you to get into it and understand it better. And now it gives you a reason to follow it. So it's not a bad first step. Anyway, Barb, final thoughts, and where can people find more about you?
There's so many different investments out there. And my advice to you, as it is almost every week, is Educate yourself. Don't invest in things you don't understand. Keep your portfolio diversified. That will protect you from outsized losses, albeit protect you from betting on a winning investment. My name is Barbara Friedberg. You can find me at Barbara Friedberg Personal Finance and also on my YouTube channel. See you next time.
Great. And thanks for coming on, Barb. That's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name's Kirk Chisholm, Wealth Manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.